Hello, today we are solving October 2021 paper question number 6 part B. Prepare the statement of profit and loss and other comprehensive income for the year ended 31st March 2021. So here Yusuf has started his business of buying and selling mobile phone accessories. He started the business with a deposit in the bank from his own money and 8% bank loan payable in the full at the end of 5 years. He did not keep full books of account, but he does not have a bank account and a number of other documents. He has asked you to assist him to prepare a set of financial statements for the government. The following is the information summary available. So they have given bank information summary, and then some cash from the sales was spent, okay, to pay off some of the things expenses, and then additional information is given. So from this we are supposed to calculate part B1, statement of profit and loss and other comprehensive income for the year ended 31st March 2021. Now the format for this, okay, statement of profit and loss you should know very well. So one is, first you will find the revenue. The next step you have to include is the purchases of inventory, okay, plus any opening inventory is there minus the closing inventory, it will, and then you will get the cost of sales. Then revenue minus this will give you the gross profit, and then less all the expenses. Then find the gross profit minus this expenses will give you the profit for the year. Okay, now let's calculate. First one is the revenue. Okay, we have to calculate the revenue. So wherever the information is given about the revenue, we have to include. First one is trade receivables, okay, here. And then we can also see that, okay, 45,000 was the trade receivables. And then he says that uh, cash sales banked, okay, they have given. And then, and from the cash sales, okay, he has also used for purchases, okay, so he has also paid off all of this amount. So this will also become, okay, include the cash sales. Okay, these all include the cash sales, okay, because it was used to pay off these expenses. Now the checks from the trade receivables were at 45,000, okay, and then these are the other things that's included. Okay, so now let's calculate. Here we can see that all we have to do is the credit sales plus the cash sales. So from this, okay, there are no other, and they have given trade receivables were at 5,100. Okay, at the end of the month it was still at 5,100. Now, okay, here we should know from the trade receivables we can understand how much of the credit sales has happened. Okay, credit sales has happened. So all we need is, there was we don't have information about the sales return. Okay, we just have the information about how much was the bank they paid. We don't have information about there was no irrecoverable debt. These are the things. So it's a simple trade receivables balance you can prepare, and then understand what was the credit sales that happened. So at the beginning information we don't know how much they owed. Okay, but the trade receivables, okay, the checks from the trade receivables were at 45,000. So the checks paid were at 45,000, and then at the ending balance it was 5,100. So ending balance was 5,100. So this will also become balance CD. Now from this, okay, we will assume that there was no beginning balance information they had owed, that's 0. Okay. Now let's calculate this, the credit sales, and then we add up to the cash sales to get the total revenue. Okay, so now 45,000 plus 45,000 plus 5,100. That is 50,100. Okay, 50,100 was how much the because the total has to be the same, so this must have been the cash credit sales. Now the from the cash sales we will calculate. Okay, cash sales, one was 7,000 was banked, plus, okay, 3,200 was paid, then plus 8,750 was paid, plus 1,300 was paid. So let's calculate this amount. So 7,000 plus 3,200 plus 8,750 plus 1,300. So that is equal to 20,250. Now the total revenue, okay, revenue is equal to cash sales plus credit sales. Okay, that is equal to, we have got the cash sales of 20,250 plus the credit sales of 50,100. So that is equal to 70,350. So now let's write the revenue here. So it was 70,350. Then they are saying purchases we have to calculate. So whatever is the, okay, purchases we have to include. Okay, let's include all the purchases thing. Okay, information which is related to purchases. So trade payables is here, purchases is here, then ending trade payables has been given. Now, so we had to prepare the purchases. So there was no information on the purchase written, they gave something from the bank, the discount information is not there, so all we need is only this much to prepare the trade payables account and calculate the amount of purchases that was made. So let's calculate this. So the checks paid to the trade payables were at 29,000. So 29,000. Okay, at the ending balance was 2,800. Now the total purchases, okay, we will see, and the cash expenditure paid from cash sales before banking was, this was another amount of purchases they have done using cash. Okay, so now let's calculate only the credit purchases. 29,000 plus 2,800, so that is equal to 31,800. So 31,800. Now the total has to be the same on this side. So the cash purchase, credit purchases were around 31,800. Now the total purchases is always equal to credit purchase, okay, plus cash purchase. So that is equal to credit purchases, okay, were around 31,800 plus the cash purchases were around 3,200. So that is equal to, so it is around 35,000. Now let's write for the purchases. It is 35,000. And there is no information about the opening inventory anywhere. So but the closing inventory was at 4,750. So we have to subtract this to get the cost of sales. So less 4,750. So the cost of sales, okay, will be equal to 35,000. Okay, 35,000 minus 4,750. 35,000 minus 4,750. that is equal to 30,250. Okay, this was the cost of sales. Now we have to subtract this from the revenue to get the gross profit. So the gross profit is going to be equal to 70,350 minus, okay, 70,350 minus 30,000 minus 30,250, that is 40,100 is going to be your gross profit. So gross profit is around 40,100. Then we have the expenses calculation. Let's do first one is a rent. The rent expense, okay, what is the actual rent that needs to be paid for this year? It says that rent for the year is at 500, okay, per month. So which means that, okay, 500 into 12, they are supposed to pay 6,000, okay, 6,000 actual rent to be paid. But here we can see that they have paid 7,500, they have paid extra. So 6,000 plus we can see 1,500 has been paid extra. This is a prepaid expense, okay, it becomes asset. So let's write here, first one is actual rent expense incurred alone you have to write, not any prepaid, okay, that you are including so that you can account for any prepaid and owed balances. Okay, so then wages 900 was owing and this much was paid. So 10,000, okay, 10,000 plus 900 was still owing. Okay, owed expense is a liability, so we will account it later. Okay, this is an owed expense, so owing is a current liability, so we can mark it here. You have CL, a current liability here, okay, and you have a prepaid expense which is a current asset, okay, current asset of 1,500 for the rent. Okay, so now here you will include 10,900, and then you have motor vehicle expenses. Okay, motor vehicle expenses, we can see that 5,800 was the expenses. Okay, 5,800 was the expenses, and um sorry, that is motor vehicle cost. Okay, motor vehicle expenses were 1,900, so 1,900. And then you have general expenses. Okay, general expenses were 4,200, and then some more information is given, it is 1,300 was also paid. So and there is no adjustments here, so we will include the total, so that is equal to, it was 4,200 plus 1,300 that was paid, so that is equal to 5,500. So it is equal to 5,500. And then you have the bank loan interest. We have to calculate 8% bank loan repayable in full for 5 years. So the bank loan was around 5,000. So 8 percentage, okay, so 8 percentage of 5,000, 8 percentage of 5,000, that is equal to 400. But they have paid only 200. Okay, they have paid only 200, so this is a liability. Okay, they have, that is owed expense. Okay, the owed expense is still existing, so this becomes a liability here. So current liability of 200, but the actual interest they are supposed to pay we have to include. Okay, the actual interest, this year's loan interest should be 400. Okay, then we have depreciation calculation for the motor vehicle. They are saying it is 5,800 is the cost they purchased, but the value became 4,700, so the difference will give us the depreciation value. So 5800 minus the current value is 4700, so that is equal to 1100. So that is equal to 1100. And then you have the fixtures and fittings. Fixtures and fittings, they were bought for 2000, but the value has become 1500, so the difference is 500. Okay, that's the depreciation value. So it has become 500. Now let's add up all the expenses for the year. Okay, so it is 6000 plus 10,900 plus 1900 plus 5500 plus 400 plus 1100 plus 500. So that is equal to 26,300. So 26,300. Now let's calculate the profit for the year. So 40,100 minus 26,300. So 40,100 minus 26,300, that is equal to 13,800 was the profit.